Liebe Zuschauer, herzlich willkommen vom Parkett der New York Stock Exchange. Ich bin Manuel Koch und bei mir ist Doreen Mogavero of Mogavero, Lee & Co. Thank you so much for joining us.
Thank you for inviting me. Very nice of you.
Doreen, on Friday we saw the 15,300 points all-time high for the Dow Jones. It's crazy here on the floor.
Well, I think it's very exciting, that's for sure. I think the market is definitely telling us that it's going higher. There is no sell in May and go away here anymore, I don't think.
Yeah, normally you have this rule, and the statistic says in May we saw in the past a pullback. But why is this month so different?
Well, I think when you look at the whole global economic picture, I think although we may still have some way to go for really full-blown recovery, I think that we are still ahead of most countries in terms of the recovery and going in the right direction. The economic numbers are slowly getting better. It's slow, but they are getting better. And I think for return on your investment, U.S. equities is probably the best place to be on the globe right now.
When we look to the economic data last week, we saw Philly Fed Index disappointing. We saw some retail numbers not as good as we would like to see them. So my feeling is that the recovery is very, very slow.
Well, I think that we all sort of agree with that, but I think we have to put that again into perspective. I think relative to other countries, we are far ahead of where they are in terms of recovering. And I think with the Federal Reserve sort of beginning to give us a hint that they're feeling good enough about the economy to start thinking about an exit strategy, I think has been very encouraging. This has been a market where traders have sort of looked at it as the glass half full or half empty. It was we're very divided as to how we look at things here these days. But I think for most people, it was a sign that the Fed is starting to feel we're coming around to a point where they're getting comfortable and at least thinking about how to exit anyway.
So, of course, the Fed is giving so much money to the markets. Is this maybe also dangerous, maybe more in the long term?
Well, I think that's been the thought, and I think that's why it was welcome to hear that perhaps an exit strategy is in the works, and we're thinking about paring down all of the money that's flowing in from the government. So I think that's good. I mean, if we can stand on our own 2 feet in a very short period of time, within the next, say, 2 to 5 years, I think that's an encouraging thing. We had a very bad recession here. I think, and although it's been a slow recovery, we have to admit it. It's recovering.
So when we look to this week, which important data do you see? What's driving the market?
Well, we do have initial jobless claims next week and FOMC meeting minutes. And I think those are the things in housing data. Those are the things that really people look at every single time. Those are very important staples as to tell us if we're recovering or not. But I think one thing that was very telling, J.P. Morgan came out this morning in full backing of this rally and raising their targets on the S&P to over 1,700 by year end. So I think that is something that's what's probably driving this rally more than any other economic data, is the fact that most of the people on Wall Street are starting to see a real improvement.
When we talk about the Fed minutes on Wednesday, do you expect anything new?
I don't think so. I think the big news was the last time around, and that was that they are planning an exit strategy. I think beyond that, if they were to say something surprising like they're planning it for next month, then it would be something that would move the markets. But I think right now we're pretty well appraised of everything that they want to do.
I think for investors it's so hard to do the right thing at the moment because everyone was expecting a pullback and now we go higher and higher. What is your trick, your strategy?
Well, my strategy didn't work very well for the last 4 years because I just stayed out of the market, and I did that because I felt being here I was just too emotional about the market. But I think my job is not one of investing. My job is executing the orders, so it's different. When I talk about investing, I talk about it in my own personal sense, But I think we have a lot of baby boomers out there who did exactly what I did, as I am one, and for fear of making the wrong move at the wrong time, because it was critical over the last, say, 4 years to be timing your entry and exit in the market properly. And if you were too emotional or if you needed the money too badly, you may make a bad decision, So staying out was probably a good strategy for me. I think we've reached a point where everyone needs to get a return on their money. It can't sit anymore. Nobody can afford to have it sit anymore. And I think that's part of what drives this rally, too. Little by little on dips, people are putting their money back into the market, buying dividend stocks, and looking to get a nice return on it. And it's been a winning strategy since last year, so.
But at the moment, it's not the right point to invest, or should we wait till we see the pullback?
If I knew that, I would be a very wealthy person and not standing here talking to you. I'd be on the beach. But I think that's better. That's a better question for an analyst of some kind, not a trader.
Last question. So when we are here in the end of this week, what do you expect? Are we still higher, lower?
I think we continue to go higher. I think pullbacks, people will trade, and markets will gyrate around a little bit. But I think overall, we're going to just continue to go higher.
So more exciting times here on the floor. Doreen Mogavero of Mogavero Lee & Co. Thank you so much for joining us. Und Ihnen, liebe Zuschauer, vielen Dank fürs Zuschauen hier vom Parkett der New York Stock Exchange. Wir haben es gehört, eine aufregende Zeit. Die Stimmung ist gut hier auf dem Parkett der New York Stock Exchange. Für Sie gibt es weitere Informationen auf unserer Webseite auf www.drf.fm.